Hello, everybody. Welcome back to my channel. My name's Max. I appreciate you guys being here. Tonight, I wanted to talk about Roundhill distributions. They have announced distributions, so I thought it'd be a good time to look at the distributions and also talk about the performance of Roundhill versus Defiance and some of the other funds and see how they're doing, which is pretty damn well this month. This is the this is the month of Roundhill. Roundhill is definitely the fund of the month. I'll show you what I mean in a second. All right. The dividend was only 26 cents. It was 38 cents last week, 38 cents the week before that, and 41 cents the week before that. Now this is for XDTE. So this is for the one based on SPX or S&P. Now, of course, the NASDAQ's a little more volatile. Sure enough, true to form, this dividend was 31 cents. But last time it was 47. Then the time before that, it was 51, then 56. It's been really elevated lately. All right. So we can see what drives the returns on this fund and also the Defiance funds and also ISPY. This is daily volatility, and this is a whole different market than monthly volatility. Monthly volatility is what you hear people talk about when you talk about the VIX. And a lot of people, especially for years and especially old timers, they sell options in the monthly time frame. You know, they sell a call spread for July. Well, nowadays people like me and stuff are selling stuff in this week, sometimes tomorrow, or, you know, but in the next week or two. All right. Well, it's just a difference in generations. But because of that, we have our own VIX. And this is it right here. It's the one-day VIX or the one-day implied volatility. Now, you can see lately it's been 8 or 9, whereas just a couple of days ago it was 16. So it hasn't been low for long. But then a couple of days before that, it was also 8 or 9. So it's kind of grinding here lower. But then you go back a week or two, and you can see it traded, you know, it traded 40 on one day. It traded 30, 25, 25, 24. I mean, huge numbers compared to 8, 3 and 4 times the level of volatility we have right now. All right. We'll keep an eye on that. Now let's look at this one other way. Let's check out XDTE against SPX. Look at that. XDTE's beating the SPX. That's awesome, especially when you consider it's beating it in total return and it's paying a yield. That's usually not the way it works, but that's great. This fund is on fire. It is absolutely on fire. But just in the life of the fund, it's just been around since March, and it's up 10%. In the same time frame, the S&P's up, I forgot, it was 9%. Now let's look how bad it's beating JEPY. JEPY is fully capped 24 hours a day. XDTE is not capped about 12 hours, or is not capped about 2/3 of the day, is only capped during the daytime hours, which may not seem like a big deal, but it kind of is, especially in a bullish market. And boy, this month you could really see the difference. People are in love with XDTE, and I don't blame them. But like I always caution, just remember, uncapped is great in a bull market, but if the market turns around, you're going to be unprotected at night. So you're going to be doing this much worse than these other funds, like these safer type funds, JPY. But XDTE is killing it. They're absolutely killing it. Okay, so now let's look at QDTE and see. We'll check out QDT against the Qs and look at that. It is a dead heat. I always go with the bottom because it's not, dividends not reinvested. So dividends not reinvested. The Qs are beating it a little bit, but it's only over a half a year time frame. And the Qs pay a terrible dividend. They only pay $1.33 on a $400 stock, $445 stock, whereas QDTE pays $7 on a $46 investment over half a year. I mean, that's insane. So over a full year, that would be $14 on 46. What is that? 14. That's 1/3. Yeah, it's about a 30% dividend. Nice job, QDT. All right, so let's look at QDTE and let's compare it to and it's stomping triple QI also. Triple QI is doing well, but not as well. Not as well. Now, but let's look at the difference here. Triple QI is still doing pretty well, and you can see triple QI was not down as far as QDTE. That triple QI is one of the safer funds out there, meaning it falls less on the downside. But anyway, so that doesn't surprise me. QDT is a fairly safe fund also, but compared to triple QI, it's it falls a little bit further. It also, as of recently, is going up a little bit faster also. So, it's like anything else. All right, so let's look at this. The thing is, triple QI is totally capped, but triple QT is not totally capped. Okay, and it's still behind. It actually, triple QI is doing better than triple QT over the time that triple QI has been around. Triple QT has only been around since June 21st, but it's definitely behind since June 21st by a little bit. Is it not even? Is it only paid 32 cents? I guess that's about right. The same time frame, this one paid $3.60. Well, that's not a very flattering comparison there. All right, well, let's. But the triple QT haven't been out far enough. Let's do this one. Let's do XDTE and compare it to SPY-T because it's uncapped against uncapped or partially uncapped. XDT is partially uncapped, so SPY-T. So it's more of a fair comparison. All right. And XDTE is killing it still on this one, but you can see SPY-T's holding a lot closer, catching a lot more upside. But I'll have you notice SPY-T is also caught all the downside. It didn't have any buffer. It went down just as far as XDTE, whereas in the JEPI comparison, it was quite a bit difference. These ones that are fully capped have a lot more buffer. You can see that in this one, it looks like XDT dropped about twice as far as JEPI. Okay, so we'll check that. We'll check that periodically especially on paydays. So anyway, let's check this. This is one more way to look at the same information. This is the change for the last month. So, and what this is XDTE, ISPY, and JEPY. Those are the single day funds. And they're single day based S&P. There's other single day funds based on NASDAQ, but these are the single based S&P funds. And I probably ought to put SPY-T on there as well. And I don't know why it's not on there. It'll be on there by tomorrow. But in any event, it's not on there right now. But I also wanted to compare it with the short volatility funds, SVOL, ZIVB, and THTA. I think those are interesting to look at, and those move a lot, especially when volatility pops. So those short volatility funds really took it on the chin the first part of the month, but really everything did. Even XDTE, which is great, as we all know, is down 5% at one point. JEPI, which I love, which we all know is down 5.5% at one point, and is now up 1.35. Nice turnaround. That's quite a swing, isn't it? And they say these things don't catch upside. Think about that. It went up 6 points from August 6th to August 27th. A part of the reason is because the distributions have been insane. and their last distribution was high, and their next distribution is going to even be higher. Now, Roundhill pays distributions weekly. So you can kind of look at and it's based on the same thing. You can kind of look at Roundhill and you can kind of try to project this distribution, but the distribution for JEPY and triple QY. But in any event, it's interesting to see the ones, how the ones that drop further and faster and how they recovered. THTA still, still down 5%. It's the slowest to recover. ISPY looked really good also. Let's look at one other thing. Let's compare XDTE with ISPY. That is another one-day fund. They don't really use options in the open market, but they use a swap based on a one-day covered call index. And also the swap projects a really far out of the money call. They sell it the way further out of the money than Defiance does. So I've talked about it before, but further out of the money is a return enhancement. When you sell at the money or closer to the money, comparing two funds, then that's a yield enhancer. So ISPY, let's see, ISPY is a total return monster. It's getting here in half a year, it's got 9%. Now, it doesn't pay a lot of yield. XDTE pays more than twice as much yield and gets a little better total return, at least over this past half a year. ISPYs are a great fund, though. I'm not knocking ISPY, but it looks a little light in the yield department compared to XDTE. Okay, it's the same. It's a similar comparison. It's a similar criticism that people that trade JEPY could say, because JEPY's yield is 5 compared to 8. The cost of the stocks are the same, roughly, the starting price. I mean, it's about a 30% difference. JEPY pays about 30% more yield. Let's look over here at QDTE and compare its yield that is paid to triple QY. All right, so these guys have paid $7 on 46, where these guys have paid $11 on 49. Okay, so it's quite a bit difference. It's almost twice as much. That's why when I was saying yesterday it pays about half as much, this is kind of what I was meaning. But in the case of XDTE and JEPY, it's not quite half. It pays 30 to 40% more. But triple Q or QDTE to triple QY, it's about double the dividend. Now granted, QDTE gets a couple of points better total return, 6 to 4, but triple QI pays a monster dividend. Anyway, they're both good funds. It depends on your needs, your risk tolerance. It's just interesting to look at them, and they're fun to compare. So a quicker way to compare them is just like this, and this is how we're going to compare them on a daily basis. I'll keep this chart going, and we'll restart it at the first of the month, or something like that. Or maybe I'll just make it a rolling month at all times. Once we get to a month, I'll just have it a rolling 30 days or something. I just think this kind of stuff's interesting. I'm trying to make more interesting ways to present the data so we can know what we're investing in. I love to talk about this stuff, but any way I can help explain it, I'm sure happy to do it. All right, guys. Well, I appreciate you being here. Hope you're happy with the dividends. They're a little bit low. They're a little bit low, to tell you the truth, but they're back to normal. It's back to earth time. So, all right, guys. Have a good one.